Hi everyone, this is a technical analysis on WTI Crude Oil. Let's start with some fundamental background first. Crude oil has been supported amid a confluence of positive supply and demand drivers, but the recent US data made the picture murky. In fact, on the supply side, the tensions in the Red Sea are still present, and overall, there's still a high geopolitical risk in the Middle East. Moreover, OPEC Plus recently extended the voluntary output cuts into Q2. On the demand side, the recent economic data has been showing a reacceleration in activity, which was supported by the rate cuts expectations and the end of the tightening cycle. Last week, though, the US ISM manufacturing PMI, which is one of the most important leading indicators, missed expectations by a big margin. It might be just a blip, or the recent pullback in the rate cuts expectations turned the momentum around. Nonetheless, this might be enough for a bigger correction in crude prices. Now in the daily chart, we can see that crude oil failed to break out of this key 80 resistance zone following the miss in the SM manufacturing PMI. The price pulled back into the 21 moving average, where we found some buyers stepping back in to try again the breakout. We can expect the sellers to lean on the resistance again, with a defined risk above it to target a drop back into the major trend line around the 76 level. On the 4-hour chart, we can see that the buyers land on this black trend line where they had the confluence with the 61.8% Fibonacci retracement level and the daily 21 moving average. If the price were to break lower, the bullish setup would be invalidated and the sellers will likely increase the bearish bets into the major trend line around the 76 support. On the 1-hour chart, we can see more closely the recent price action with two key levels now to watch carefully. In fact, on the upside, we have the resistance around the 80 level, where we can find the confluence of the downward trend line and the 61.8% Fibonacci retracement level. On the downside, we have the support around the 78 level and the confluence of the upward trend line and the 61.8% Fibonacci retracement level. The buyers will look for a breakout to the upside to increase the bullish bets into new highs, while the sellers will defend this resistance and increase the bearish bets on a break below the 78 support. Today we have the US ADP, the US job openings, and the Fed Chair Powell speaking. Tomorrow we get the latest US jobless claims figures, while on Friday we conclude the week with the US NFP report. Weak data is likely to weigh on gold, on crude oil, while strong figures should give it a boost.